Good morning, YouTube. What's happening, guys? You've tuned into Rules for Rebels. In today's video, I wanted to share with you guys 5 high-interest savings accounts that are paying over 2% interest. Each one of these banks are FDIC insured. No hidden fees, no crazy stuff. Very easy to use online sites and mobile applications. And these are all available nationwide. This isn't going to be some small regional bank in Pennsylvania that if you're not in Pennsylvania, you can't take advantage of. So we're going to get into sharing 5 high-interest savings accounts that you guys can stash away some money in and have that money grow for you at least a little bit. I just wanted to kind of delve into a couple things before we get into this. I think I made a video a couple weeks back about how people are scared to put their money into the markets right now. People think that markets are at an all-time high. This isn't sustainable. It can't keep going. So a lot of people either are scared to put their money into the markets for the first time or have pulled their money out of the markets and are waiting for a pullback, a correction, a crash to then put their money back into the markets. Savings is a great thing. Pretty much every week we see an article like this. 58% of Americans have less than $1,000 in savings, survey finds. And every week we see these media articles either, most baby boomers don't have enough saved for retirement. Most millennials are spending too much on avocado toast and don't have any retirement savings, don't have any money saved up for a house. So savings is a good thing. However, savings can be a bad thing if you just save, and never actually put that money to work for you. There's this pesky little thing called inflation. And, when you hear your grandma or grandpa say things like, I remember when I had my first job, a cup of coffee was a nickel. And now when you go to get your morning cup of coffee, it's $2, $3, $5, $7 if you're getting a soy latte, frappuccino, caramel drizzle or something like that. And that's because of inflation. I believe in 2018, the true rate of inflation, or at least the government's true rate of inflation, was 2.44%. I think most people probably would agree that inflation, the true rate of inflation is probably more like 3 to 4%. And a lot of people even make the argument it's between 5 and 8% if you actually factor in different sectors. Like, look at how much the cost of education is going up, like way faster than things like consumer goods and people's wages and things like that. Look at how high real estate is going. So a lot of people say if you really look at like every area, the true rate of inflation is much higher than 2 or 3%. So what we really want to be doing is, it's good to save money. It's good to have a safety net. And I can definitely relate to liking to have cash. Anybody who's been broke or poor before, which I have, having cash is comforting. Anybody who's self-employed, I've been self-employed for 7 years. And when you're self-employed, shit happens. And if you're not producing, you're not eating, no money's coming in. You don't have a steady paycheck coming in. So I think people who are self-employed, would be smart to keep a little bit more money and cash for a rainy day. But ultimately, once you have that rainy day fund, once you have 3 to 6 months of living expenses, you have your umbrella. You don't need to continue buying umbrellas. And it's good to kind of put that money to work for you. So who might want to have some money sitting in a high interest savings account? You're preparing to buy a house within the next year or two, and you don't want to be subject to the volatility of the markets. If you're looking to get into real estate or are already in real estate, you're looking to buy a rental property, keep some money in a high interest savings account. If you're looking to start a business, you're saving up some money to throw into a private label business or something like that. And it's something you're going to be starting in the next 6 months, year, 2 years. Keep your money in a high interest savings account. So all of these high interest savings accounts we're going to be talking about pay 2% or higher. Again, they're all FDIC insured and they're all available to everybody in the US, regardless of what state you're from. So, might as well try to maximize the amount of money that your money's making while it's just sitting and not really doing anything. So we're going to start with Ally Bank. I've actually had an Ally Bank account since 2015. And I remember when I first heard about Ally Bank and first got my Ally account, I was a little bit hesitant to do an online bank with no physical branches. Nowadays here in 2019, it's pretty normal. Almost everything is online. Almost everything is digital. But, even just a few years back, it was kind of weird to some people, kind of uncomfortable to deal with a company who didn't have a brick and mortar location. And I really don't think twice about this. But for anybody who does prefer having a brick and mortar bank that you can walk into, here's one thing I would have to say to that. A while back, probably a couple months ago, I went into a Chase Bank branch. and I had an issue. I forget what the issue was, but I wanted to sit down with somebody face to face and talk. So I went into Chase. I sat down with a personal banker, and not only was he kind of clueless about everything, I seemed to be more informed on the issue than he was. But everything I needed done, he would have to hop on the phone and call an 800 number for. And I believe I left not even getting a resolution to my issue, and I had to call the 800 number. So realize that your Bank of America, your Chase Bank, your PNC Bank, whatever bank you go to that has a brick and mortar physical location, you have a bunch of minimum wage employees in there. They're really just faces. They have no power to do anything. You're still going to be subject to either the corporate office or calling the 800 number. So there's very little to gain by having a physical branch. Now, don't get me wrong. I like the idea that if I had a big issue, I could go in and pound on the door and yell at somebody face to face. But ultimately, it's not really going to do much for you. And also I know a lot of times when these like online companies pop up, I remember when Geico Insurance first popped up, I was like, who's this new insurance company with a lizard? Geico Insurance had actually been around since 1933, I think it was. They just did a good job of kind of adapting to the times and bringing their business online. And I believe they were the first insurance company that lets you purchase, insurance online. Ally Bank is not some new fly-by-night company. They've been around since 1910. They were actually founded under a different name. They changed the name to Ally in 1919. So they've been around for a long time. It's just that a lot of us started hearing about them probably 2014, 2015, when they really started pushing these high-interest savings accounts and did a really good job of kind of marketing it online. So Ally right now is paying 2.2% interest on an online savings account. One thing I like about Ally, they'll let you have unlimited accounts with no fees. So what's kind of cool about that is, if you want to have one account to save for like a vacation fund, you want to set up another checking account to maybe keep the money from your drop shipping business separate than the rest of your money. You can set up another account to keep your drop shipping business separate. If you have a YouTube channel and you want to keep your YouTube earnings and income and outgoing monies separate from everything else, you can set up an account for your YouTube business. If you want to have different kind of like goal directed checking or savings accounts, you can do that. So you can have as many accounts as you want. No additional fees. Let's see. Ally has a great online interface. They have a great app. You can deposit checks from their app. And while Ally was one of the first companies to do this, I think they've kind of gotten a little bit comfortable in being so well known and so well trusted. So they haven't been as competitive on the interest rates as some other banks. But Ally is 2.2%. Like I said, I have an Ally account. It's easy to transfer money back and forth. It's not really my main account, but I take advantage of the high interest. And if I ever do need to move money back into my quote unquote real account or my everyday account, very easy to do so. So Ally Bank is the first bank that we're going to be discussing today. Although it is the lowest interest of all of these, I do really like Ally, and I'm probably not gonna change anytime soon. The next bank we're going to be talking about is Macrus by Goldman Sachs. One thing I like about this is just in terms of reputation, as long as the bank is FDIC insured, which everything on this list is, they're a safe bank to use. If the bank goes under, you're going to get your money back. But still, in terms of customer service and things like that, Goldman Sachs is a reputable name. We've all heard of Goldman Sachs. So, some people would probably feel more comfortable using Goldman Sachs than some other bank that they hadn't heard of before. Kind of a funny inside joke. Whenever me and my girlfriend are driving around, we'll see like some random weird bank, like, First Midwest Corn Savings Bank for farmers of Illinois. We always kind of joke, like, who would use that bank? Why wouldn't you just go get a B of A or a Citibank account? So a lot of people do like using a bank with a name and a reputation that they're familiar with. Let's see. Macrus by Goldman Sachs pays 2.25% interest. No fees, no hidden fees, no nonsense. Obviously FDIC insured. One downside of Macrus is you can't deposit checks mobily. Now, this may not be an issue for you. How often are people dealing with checks? I haven't ordered checks in several years. And the only time I ever get checks is when I fill out class action lawsuits on topclassactionlawsuits.com and like randomly get checks for something I bought that they wound up getting in trouble for lying about their product. Which check that site out, kind of, I wouldn't even call it a side hustle, but I can almost guarantee anybody who goes on top class action lawsuits, you'll find some product you bought that has some type of recall. And, sometimes the checks are 50 cents, sometimes they're $8, sometimes you get a free product. But I've actually gotten some checks for several $100s off of that site. The only other checks that I ever get, and I'm always shocked when one shows up in the mail, it just seems so weird to me, is I'm a member of this affiliate program for Charge.com. Charge.com is a high interest merchant processor. I use them personally for several of my businesses. I recommend them to friends who are starting businesses. If I ever hear about somebody who's trying to start like a weed pipe business, vape business, even consulting, anything that's considered high risk, I always refer people to charge.com. And I get $100 for everybody who signs up. And oddly enough, whereas like literally every other affiliate program I'm a member of pays out via PayPal. Either that or a direct ACH transfer. Charge.com still sends checks. It's really weird to me, but sometimes a couple times a week, sometimes once or twice a month, I'll have a $100 check show up in the mail. And that's really the only time that I ever need to deposit checks. Worst case scenario, if you did want to deal with Macrus by Goldman Sachs, if you like their interest rate, if you like the well-known bank, you could very easily just deposit these checks. I recommend, even if you have an online bank like an Ally, a Macrus, it's probably not a bad idea to keep a local bank account, whether it be with a national bank like Chase, a credit union, something like that, but just something where you can go physically deposit cash or a check into an ATM. And worst case scenario, you could just ACH that money over to your online bank. And again, their interest rate right now is 2.25%, and they kind of compare it to Chase at 0.04, Citibank 0.04. I believe Citi normally does specials where you can open up Citi money market accounts for like 2% and some change. But obviously they're trying to make themselves look a lot better. No fees and no minimum deposit. You can link other bank accounts for easy ingoing and outgoing transfers. US-based contact center, so you're not going to be calling somebody in India. And they're FDIC insured. Very easy to open up an account. And I believe you can see, let's see, we'll say. So they'll let us calculate and see over the course of 5 years, if we have $180,000 in the account, we're going to make $21,182 in interest, whereas the national average is $3,995. And if you do right now have your money sitting in a bank account that's paying you like chump change for interest, well, having a savings account and interest shouldn't really be thought of as investing or making money. If you are going to have money just sitting there, you might as well make money as opposed to not make money. Even at 2%, if you have $100,000 sitting in a checking or savings account, 2% is $2,000 a year. That could be launching a small little drop shipping business, private label business. That could be taking a vacation. For the very minimal effort it takes to move your money out of your bank account paying you 0.004% interest to an account that pays you 2% interest is well worth it, in my opinion. So this is a second bank, Macrus by Goldman Sachs. The next bank you may think you're familiar with, you probably aren't. This is CIT Bank, not to be confused with Citibank. This has no tie-in with Citibank whatsoever. And CIT Bank is paying 2.4% in interest. And in order to get this interest rate, there are two catches, and it is pretty easy to reach. The first one might not be easy for everybody, but the second one is. So the first catch to get the 2.4% interest is you must keep a balance of $25,000 in the account. Not a huge amount of money, but it's not chump change either. So I realize not everybody has 25 grand that they can keep liquid in cash, nor necessarily might you need to. If your monthly expenses are $2 grand a month, you may only need $6,000-8,000 as an emergency fund. You might not want to have $25,000 sitting. But the other way that you can take advantage of this 2.4% interest rate is by depositing $100 per month. So that could be direct depositing your paycheck into this if you are a YouTuber and you have YouTube ad revenue coming in every month. If you're in an affiliate program or an Amazon merch seller, just anything where you consistently make $100 or more a month, just set one of those ways into going into your CIT bank account, and you're going to get that higher interest rate. They also have a no penalty CD, a worry-free. I'm not sure why when they're offering 2.4% for a checking account, I'm not sure why you would do a CD at 2.05%. Although maybe if you deposit higher amounts, they give you a little bit more. Yes, really, that's all that. I guess there's not too much else to say about CIT. Let's just check out this interest rate real quick. Yeah, I'm kind of stumped why they're marketing. It's 2.05% isn't terrible for a CD, but when they're offering 2.4% for a checking account, a 2.05% isn't that attractive for a CD. The next one, I think you guys are going to like this one. I absolutely love kind of their marketing. I like kind of how they're approaching banking in kind of a funny way. Redneck Bank, where banking's funner. We're flanking the top competition, 100% internet bank. Let's see, what do we have here? 3% APY, Redneck Rewards checking account, 2.4% Mega Money Market account, sign up for mobile deposits. I haven't really looked at these guys' website as of yet. You see this little fly? You can kind of chase the fly around around the site. That's kind of fun. Let's see, what else do we got in here? High interest savings account. Okay. Now, kind of how this works, you can get 2.5% on your savings account, I guess 2.4% on a money market account, and you can actually get 3% on a checking account. Well, why are they offering a higher interest rate on checking accounts? That seems kind of weird, right? Like savings and CDs is normally higher. Well, the 3% is only up until the first $10,000. Anything over that $10,000 will go into the savings account, which will be at 2.5%. The 2.5% goes up to $50,000, and anything over $50,000 can go into the mega money market account at 2.4%. And this is pretty good. I believe this is higher than Vanguard. Their money market mutual fund pays, I think, 2.2%. I could be mistaken about that. But 2.4% is pretty decent for a money market account. It's much better than my local bank is paying me. And, maybe I think with this Redneck Bank, you'll either find it kind of cute, kind of how they're Redneck Bank and they got the flies and the donkeys and all this other stuff, or you may think it's unprofessional. I don't know. But this is an FDIC insured bank, and I actually have great reviews. Check out the reviews online. Very, very good reviews. So I wouldn't be scared off from using Redneck Bank. Lastly, we have Wealthfront, and Wealthfront finishes off with the highest interest rate. I actually have a Wealthfront account back in 2014 or 2015. I was playing around with a lot of different type of accounts. I tried, Lending Club, Prosper. I set up a Wealthfront and a Betterment account. I didn't actually use them for a cash account. I actually used Wealthfront and Betterment for their robo-advisor or robo-investing services, which is, essentially instead of having a real stockbroker working for you, there's a computer program and an algorithm that invests your money for you. I actually found that Wealthfront outperformed Betterment significantly. And I actually liked Wealthfront. It was easy to use. It was easy to deposit. I like that they automatically rebalance your portfolio. If you wanted, you could have them do tax loss harvesting. I like that the information was presented to you in kind of fun charts and graphs, and you could set savings goals or earnings goals. But I ultimately wound up pulling my money out of Wealthfront, and really the only reason for that, if you go on personal finance message boards and things like that, like everybody is always circle jerking Vanguard. So I wound up setting up a Vanguard account. Vanguard is known for having the lowest fees. Go over to r/investing subreddit. Like everybody will tell you to open up a Vanguard account and throw all your money in VTSAX, which isn't a bad strategy. Vanguard does have low fees. Recently, I've been seeing TV commercials that Fidelity's been doing, and Fidelity now actually has lower fees than Vanguard. I imagine that's only on their own funds, but that's pretty much the same deal with Vanguard as well. I like Vanguard. Vanguard does have a terrible back-end interface. It's very kind of outdated. It's like early 2000s. Excuse me. So if you're going to be just investing in a mutual fund and setting up an auto deposit and throwing all your money into like a Vanguard Life Strategy fund, a Vanguard, what do they have? They have Life Strategy. There's another type, Target Date, or just like a VTSAX or something like that. You really don't need to use their interface much. But if if you like a cleaner interface, if you like, something a little bit with a better UI and a little bit just easier to use, you might want to consider doing something like Wealthfront. But what we're talking about today isn't investing. It's actually Wealthfront's cash account. And let's see here. What notes do I have on this? Wealthfront's cash account pays 2.5% on money you have in there, and it's FDIC insured up to $1 million. Now, you guys are probably thinking the same thing I did. Like FDIC insurance is only up to $250,000. What do you mean FDIC insurance up to $1 million? Well, here's the catch with that. I guess it's not really a catch, but FDIC insurance is only up to $250,000. How can you insure $1 million in a Wealthfront account? Well, Wealthfront basically breaks up your $1 million into 4 different accounts, 4 partner banks or something like that. So they'll put $250,000 in one account, $250,000 in another account, $250,000 in another account, $250,000 in another account. They spread it out across 4 accounts, and that's how they're able to give you FDIC insurance up to $1 million. I've heard a couple people question whether that's legitimate or whether, if banks did default, would there be some catch to where you wouldn't get your money? For most of us, we probably don't have to worry about having $1 million liquid sitting in a high interest savings account. so probably won't be an issue. But if you are somebody who would be affected by having over $250,000 liquid cash sitting there, it might be something worth looking into. I thought this was kind of cool. They have something on their site like, when should I hold on to cash? Because you should be investing. And obviously, this is a smart thing on the part of Wealthfront. This is most likely a loss leader. Wealthfront is primarily a robo-advisor, robo-investing account. So what Wealthfront wants to do, and it actually does make a lot of sense, and offers a lot of convenience for users. Keep your rainy day money in here, right? You're going to earn 2.51% interest, which is about as good as it gets, as good as you can expect for interest. And then anything that you don't need for a rainy day fund, a down payment for a new home, an upcoming expense like a car, a wedding, or a dream vacation, well, all of that you're going to put into using robo-advisor, or to using Wealthfront's robo-advisor services, and actually put your money to work for you, actually really invest. And then if you ever want to pull money out of the market, well, your money can sit in the same account in cash, earning 2.51%. So I think this is probably kind of a loss leader for them, because they're going to make the bulk of their money off of you actually investing. I'm actually considering starting to use my Wealthfront account again because of this. I got a decent, I like having some money sit in cash. I also like putting money to work for me. So this is kind of the perfect mix of the two. Let's see, we've got you covered. FDI insurance up to $1 million, no market risk, fast and easy setup, unlimited free transfers, so easy to bring money back to your real bank if you have expenses you need to take care of. No fees, and it's only $1 minimum. Let's see, let's see, account balance. I hate when people have sliders and don't let you pull in the money. So let's just say you have, I don't know, $200,000. In a year, Wealthfront's going to give you $5,000. The industry average is $201. So pretty simple, which is going to be better there. To be quite honest with you guys, I haven't even looked to see if any of these companies have referral programs or affiliate programs. However, being an affiliate marketer, if I'm sharing information for free, if there is a way for me to get some type of referral bonus or kind of boost up my account for helping other people learn about a service, I always like to try to do that. Typically in the financial world, there aren't really affiliate accounts that pay you money. But sometimes, I forget whether, actually now that I think about it, I think either Wealthfront or Betterment gives you like a free month of service for everybody that you refer. So if I can find an affiliate account or an affiliate program, an affiliate link, referral link for my Wealthfront account or for any of these other accounts, I'll drop them below. You don't have to use them, but if you appreciate me making this video, if you learned something, I'd appreciate it if you could use it, and I'll probably get maybe a month of free service or something like that for you doing so. If you guys have found or are using other high interest savings accounts that you find to be better than this or you really like, go ahead and drop a comment down in the comment section below and let us know about it. If you enjoyed the video, give it a thumbs up. And if you are not subscribed to the channel, click that subscribe button down below. Thanks for watching, guys, and I'll catch you on the next one.